We talk to a lot of our clients and a lot of other businesses where they're making a supply of goods with installation and where they're not established in the country where their customer is based. This can throw up a lot of complexities from a VAT perspective, but also from an SAP perspective and how to handle it within the system. My name is Derek O'Brien, and I lead the tax technology business here in Meridian. I'm joined by Tara Doyle from our consulting team, hi Tara, and Nazar Zaidi from our tax tech product team. You guys have a lot of experience with this, and it comes up an awful lot, especially in different industries and so on. But the complexities really arise in SAP. But before we get into SAP, can you run through, Tara, for us an explanation of how the VAT treatment and what are the different various factors that need to be taken into account when you're dealing with supply and install?
Of course. So where we have a non-established supplier selling goods to a customer in another EU member state, and those goods require to be installed in order for the customer to be able to use them, we talk about supply and install. So it's a mixed supply. We have an element of goods, but we also have a service element because of the installation of those goods. So the place of taxation, the place of supply for supply and install goods will be the member state in which those goods are installed. And the exchange of ownership of those goods will go over to the customer once the non-established supplier has finished with the installation. So if we have a look at our example, we have a Belgian supplier and he's delivering goods to his customer in another EU member state, but he must also arrange for the installation of those goods. And once that's complete, there's a sale to his customer. Now, normally you would have a movement of goods, first of all, from Belgium to the EU, and then you would have a domestic sale. Now, the rules for supply and install are a little different because the place of taxation is there where the goods are installed. So in this example, we don't have an inter-community dispatch from the supplier and we don't file any EC sales lists, but instead, once the exchange of ownership takes place, we have a domestic sale. As with mixed supplies, and as is common, it's essential that the supplier really understands, is he providing goods or is he providing services? Because the true nature of that supply isn't sometimes clear. And member states don't always have a uniform approach. So some member states might, for example, look at the material content of a supply and say, okay, if you have more than 50% material, we have a supply of goods. Whereby if we're below that 50%, it could be a supply of services. So we already said that where we have a domestic supply from a non-established supplier to his customer, we would generally expect there to be VAT on that as a domestic supply of goods. Now, some member states have introduced a simplification whereby they will allow the non-established supplier to sell those goods to his customer in a second EU member state, but to apply the extended reverse charge. So what this means is effectively the supplier won't charge output VAT. The customer will self-account for the output and input VAT on that supply, and it could potentially mean that our Belgian supplier now doesn't need to be VAT registered anymore in the member state where he's installing the goods if he has no other reason to be VAT registered. So it can be quite useful. Now, of course, it's difficult if you're the supplier to really understand what the local rules are from country to country. So you have to be familiar in understanding, are you looking at goods or services? Are you looking at a supply with VAT? Does the extended reverse charge apply? Where we would have a service, we'd be looking at a general rule supply. So in fact, the place of taxation could be where the recipient of the service is established, which in itself could be different to the member state in which goods are being installed. So it is a complicated process.
Yeah, and that's the thing, it's one thing understanding it from a VAT perspective and the complexities involved in that. But then when you move into SAP, Nazar, then it takes on a whole other level of complexity, and SAP isn't always fully equipped to handle that.
Yeah, absolutely. So we have a couple of examples here we're just going to look at. But before we get into the detail, one important point to note is that SAP doesn't actually have any specific functionality for supply and install. SAP will fundamentally do a line item VAT determination. And that is indeed best practice. But of course, it has limitations where you have a supply and install and perhaps within the same customer invoice, you have multiple lines, perhaps a few goods lines and a few installation lines as well. SAP has no way of knowing that the entire VAT determination of that sales order or invoice needs to be changed because of the installation. And as such, Meridian has created different bits of functionality to help our clients address these challenges. Now, how clients do that will be heavily dependent on their process for managing and understanding what is a supply and install. So we're just going to go into one sales order here. And here we have an Austrian customer and we have a German sales org. And this German sales org is supplying some standard rated goods from its German plant. And so if we go into this initially, what we're going to see within the condition record is that initially Meridian is determining a cross-border intra-EU supply of goods. So we see here the tax departure country of Germany, the destination country would be Austria, but that's updated to EU. And very importantly, the material tax classification is coming direct from the customer master data. So that's just seeing a standard rate material being supplied. Now, many of our clients will have a specific trigger within the system to recognize that this is a supply and install. They might be using a different order type, a different order reason, or an item category. And Meridian has some very detailed functionality which allows us to take those incoming parameters and dynamically update elements of the VAT determination. So we're now just going to come into the sales order and we're just going to make an update to the order reason. And we're going to use a custom supply and installation order reason. And now we're just going to go back into our condition records and have a look at the updated VAT determination. And what we can see here is that a number of changes have taken place. So firstly, because we recognize that this is an installation, we have dynamically updated the MTC to a supply and installation MTC. The second element we've changed here is changed the tax departure country to Austria because that's where the installation is taking place. And as a result of this, we're now charging 20% Austrian VAT. So that is one example where we help our clients handle supply and installation, but it doesn't work for each client because some clients don't want to be reliant on their sales order staff to remember to change, let's say, the order reason or the item category. We have had other clients over the years who have wanted to use the material as the criteria for recognizing that a supply with installation is taking place. So we're now just going to go into an additional sales order that we've created here. And this is a slightly different example. But within this example, we see two different line items within the sales order. We see the goods line item, and we've also got a service element. And within Meridian, for the purposes of this demo, we recognize that this service element relates to the installation. So now if we pop into the condition records, we see, as expected, that the goods line item is showing a cross-border supply of goods. But if we go into the second line item, we will see that this is recognized already via the master data as an installation service, and it's therefore a tax departure country of Germany. And now what we're going to do is we're just going to progress this example to a delivery, and we're going to do a post-goods issue, and we're now going to create a billing document from this and see how Meridian has impacted the VAT determination. So we're just creating our billing document here. We're just going to save that. And we're now just going to go back into our billing document and have a look at the determination. So we'll just see here, again, we have our two line items, the goods line item and the installation line item. But now what we will see within the condition records is that if we pop into the condition record for the goods line item, that has now taken on the same VAT determination as the installation. So we see here the MTC has been updated, the tax departure country has been changed to Germany. So that is another example of where we can flexibly allow our clients to handle supply and installation depending on what their process is.
Yeah. Fantastic. Thanks a lot, guys. And thanks for bringing us through that in the system there, Nazar, as well. It really does highlight the fact, though, that even if you understand all of the VAT complexities and you've got that covered, it's being able to handle that within SAP and to not have a reliance on manual intervention as well. And it's very clear that SAP is not fully equipped to handle all of the different scenarios around supply and install. So if this is a challenge that you're facing in your business and you'd like to discuss it further with the team at all, then you can contact us and you'll find all of our contact details on meridianglobalservices.com.